Okay, good afternoon, everybody. Here we go. VTP Stage 2 online, technical Tuesday coaching call 185 for the 17th of March, 2026. Hope you're all well. Hope you've had a good start to the week. Hope you are able to navigate this interesting week ahead. And for those of you who are interested, happy St. Patrick's Day to you, okay? So just for in case anybody watching it, there'll be no VTP tag session this evening because I might be celebrating St. Patrick's Day with my partner and friends. Anyway, wherever you are, I hope you have a good day. As always, you're very welcome here. Just remember that you're always responsible for your own trading decisions. And as always, if you do want a bit more support and help on your trading, you are always welcome to join the VTP tag group, okay? Doesn't matter what you trade, doesn't matter how you trade, it's all about giving you a bit of structure, discipline, and sustainability in the way you work. All right, let's finish with sterling as always, okay? Let's have a look at what's going on here. Cable, Euro sterling, pound Aussie, pound Canadian, FTSE, pound yen, pound Swissy, pound Kiwi. So, as we've just looked, all right, pound had weakened against New Zealand dollar, but it has strengthened in those last couple of weeks, okay? But, we look at that, pound against Aussie, Aussie's remaining strong. And if we look at that on a bigger picture, kind of literally, we peaked there. That was the sort of that was the start of the tariff tantrums. And really, since then, look at how sterling has just weakened against Aussie, and it's accelerating. To me, this is like a parabolic move. All right. Now, as I said, any kind of starting to see wicks down here. Let's go to the monthly chart here. Yeah, last month we closed beneath the 50, which last time we closed and beneath the 50 was February 2023. So nearly 3 years we've been above that. And we hit the 2000. Once 2000 failed to act as support, we've just dropped, and now we're through 190. Yeah, we're through 190. Let's draw it up here. I have so many charts across so many platforms, across so many computers. It's just there we go. Everyone's nice. Okay, so that's where we are. Let's have a look at that. Yeah, I was walking because I thought this was getting messy, and I was like, are we going to find support at 190? But that's not happening, is it? Look at that 4-hour chart last week. Yeah, 4-hour chart that just literally collapsed into that. That is collapse into that. Just block it off, run back in, and then we come back down again. It's the it's the weekly chart. Let's keep an eye on that. But we can see pound against Aussie. That's what's happening there. That's that Aussie strength, sterling weakness. Pound against Canadian dollar. Okay, if we're looking at commodity dollars, it's been a messy chart. I mean, pound CAD is kind of messy as it is, but you can see what's happening there. We're only Tuesday afternoon. You might look at that and say, well, Paul, could that be a really messy morning start? But it's Tuesday lunchtime. There's a lot of trading to go on here, especially with all these central bank meetings. But certainly we had that kind of real flush candle there, which has formed that kind of double bottom there. And now I'll be looking to see, well, hang on a minute. Is this a case of just a bit of Canadian sort of profit taking in Canadian dollar and oil? Is that what's happening on that 4-hour chart? Because if we dropped, and then the world's over, the war's over, and we run up. Oh, actually, the war isn't over. And now, as I said, maybe this is a reflection of the kind of the Iran war in that particular case. All right, is this sort of inverse head and shoulders sort of building that? That's a terrible neckline, but you get the gist. All right, you get the gist. Okay, so maybe that's what we're looking there. As I said, you've got Bank of Canada tomorrow and Bank of England on Monday, so it could be just all sorts of shenanigans going on in front of that there. Pound against Swiss. Pound against Swiss has been weekly chart. It's just been in a downtrend. That is sterling weakness, Swiss franc strength, Swiss franc second in the STAM. No surprise, which you'd have thought would have carried on from the with the basically risk-off behaviour of the sort of the war starting, but actually, bang, that kind of first day of the war, or rather the first day when the markets were open during the war, because it kicked off on the Saturday. We had, real Swiss National Bank intervening there, and they said, and they were quite openly said they were intervening. Kind of had that kind of price action. We've again got this bullish engulfing candle, which gives us a bit of a sort of, once again, there's a kind of, we're using those fractals once again. You might say, well, Paul, there's a bit of an inverse head and shoulders going on there. Now you've had a cross there. Now you're wanting to say, well, okay, does it have what it takes to get up to the 50? I don't necessarily see it all as a kind of sterling strength, more just a case of maybe that kind of the reflection of the sort of Swiss shenanigans. Pound against yen, once again, yen weakness, great trend. We then get into this broadening formation, all right, just clearing out orders, clearing out stops. And then, my view was I thought, okay, we're going to drop here. Oh, yeah, we're going to drop lower. But of course, the war, when it comes to even with band being in Egypt, all right, we still don't have to import as much oil and energy as the Japanese do. The Japanese have to import 95% of their oil, and so of course, oil going through the roof. Yep, it's hurting us, but I suspect it's probably hurting the Japanese even more, and that's why you're seeing that on the daily chart. Not the prettiest of charts, that isn't it? Not necessarily if you're looking for swing trades, but you can see how that. It's, I look at that as this is building a diamond. All right, you've got broadening formation, clearing out the orders, and then you've got kind of it goes rest, surge, rest again before the next surge. And I'd probably be saying that that's what we're seeing there as well. I can update that a bit better, but you get the idea. That's what I see there. Cable, well, we looked at dollar, dollar strengthening, sterling's weakening. So not a real massive surprise that the trend is we're now beneath the 50. Okay. And certainly that daily chart, that was just in a nice downtrend. I thought maybe last week we might hold it, especially with this kind of double bottom here and this bullish engulfing candle, this bullish key reversal candle on that double bottom. But you can see only one day before it literally fell. It fell lower there, and that is a reflection there on the kind of dollar and sterling. Yeah, that was where we got up to the channel there last week and just fell away from it there again beautifully. And there's that not so strong risk off push. As I said, I wouldn't call that sterling off. I'd call that just more kind of a bit of dollar profit taking. If you've been long dollar, you've got to take a bit of profit and stuff, and that's the way that plays itself out there. Finally, you're against sterling. We saw the kind of the euro weakening back down to the 50, but we had a little bit of bump. But both euro and sterling, neither of them have really kind of covered themselves in glory over the last few weeks. There, I mean, just look at that chart, that daily chart. As I said, flowing down. I liked the fact that we kind of ended it with this bullish engulfing candle, bullish key reversal, and worked our way up. Not pretty, but then it really is. But then that was February. But if you look at March, March has been we've been right back to where we started. It is grand old Duke of York. Okay, march them up to the top of the hill and march them down again. Okay, and that's where we find ourselves in. So we find ourselves. What's that really sort of stuck between about 86.20 and 86.50? This is the kind of zone we find ourselves in here now. Could it well be that we just sit there for the next couple of days until we've got all of these central bankers out of the way? That's a distinct possibility, unless the only thing that would shift that is if one of the central bankers goes off piste and does his own thing, or there is a major breakthrough or breakdown in the Iran war. That's the way I would look at that 4-hour chart. Great 4-hour downtrend, but if we look at that this week, I'd be saying, what, Paul, it's just coiling up. That's probably more reflection of the fact that we're going into a few days of central bank speak. Okay, and we're just coiling up there before those central bankers be the catalyst for the next move. Okay, there you go, ladies and gentlemen. Let's draw it to a close there. I hope that helps. Hope that gives you a bit of help, a bit of insight. Have yourself a great trading week. Everything's going on. Remember, be on top of the news flow this week. Be on top of the order flow in terms of where money and the trends are flowing to. Make sure you're on top of your risk management. Have a great trading week, and I'll speak to you. Many thanks, everybody. Cheers.